In the pre-market trading session on April 19th, the shares of Supermicro Computer, symbol SMCI, suddenly moved sharply lower at 9:05 a.m. A member of the Hammerstone team alerted our community to the price action within seconds, while other team members set about trying to find the reason for the stock's swoon. The reason was discovered also within seconds. Supermicro had issued a press release announcing the date and time of their upcoming post-earnings conference call. More importantly, before Hammerstone posted the wording of the brief PR at 9:06 and 54 seconds, a member of the Hammerstone community of institutional traders, investors, and brokers relayed the reason for the sell-off. It was not what the press release said, but what it didn't say. Supermicro had pre-announced an elevated revenue range in 7 of the last 8 quarters. This PR had no mention of forward sales guidance, just the conference call information. The bane of every trader is uncertainty. And this omission could only mean one thing. Revenues for the quarter were either in line with estimates or perhaps lower, meaning uncertainty would now surround Supermicro in the days leading up to its April 30th earnings report. With a 564% gain over the past year, Supermicro Computer shares were priced to perfection, and momentum traders, well, they're notoriously fickle. This is what our subscriber added to the Hammerstone feed. SMCI usually pre-announces and guides up. Probably why down? Its brevity was all our community needed to understand the stock's drop, and they knew exactly what it meant. There was no upward pre-announcement for the first quarter. To understand the significance of this incredible post, one needs to look at Supermicro's pre-market chart to observe the relatively light volume and see a contained downward move during the 25 minutes until the start of regular trading. Clearly, most of the street didn't know of or have the reason behind the breaking news. But soon after the opening bell, the news began to disseminate across Wall Street and Main Street, and the gravity of the omission was fully grasped, and a day-long freefall ensued. Supermicro shares eventually fell $214, a mind-boggling 23% sell-off. One of the ways the Hammerstone scrolling newsfeed differentiates itself from its peers is our option for traders to add news, comments, or ask questions inside the feed. Our subscribers not only receive breaking headline news, research, and data from the Hammerstone team, but also from the 1,500-strong institutional Hammerstone community. If a stock suddenly starts trading up or down, the Hammerstone community will uncover the reason. Hammerstone cannot stress the magnitude of how important it was that our community knew the reason for Supermicro's drop within seconds. Whether subscribers to the Hammerstone feed were able to enter into a short trade, exit a long position, or alert their customers to the news, one fact was universal: the Hammerstone community knew. To read more case studies, learn more about Hammerstone, or sign up for a trial, please go to hammerstonemarkets.com.